There's two fundamental truths. One is we're closer to an election and a result. And the second fundamental truth is that we are closer to the end of this pandemic than we were at the beginning. And we think that we do have some way to control the virus next year, early in the year, and that'll allow the economy to reopen. And that's going to change the dynamic. So that rollover that you're talking about from technology, that's going to happen next year.
Well, I hope so, because I don't know if he's the number one trending story or one of on CNBC.com right now, Greg, is the UK's chief scientist telling basically lawmakers there that COVID's just going to become the annual flu that we're going to have to live with for years to come. I mean, that kind of changes everything if he's right. But either way, let's move on from that, because you're right. At some point, we're going to get through this here. Do you adjust your investing strategy or portfolio at all, given those things that you just mentioned?
Yeah, we're adjusting in a couple ways. One is we use alongside of a large cap index, we use equally weighted S&P 500 indexes so that we get the same weighting of a Boeing or an American Airlines as we do of Google or Facebook. That's a way to recapture or to play the recovery. The second thing we're doing is we're increasing our small cap exposure in all of our models. We think that small cap, once the economy starts to move forward, and there's $1 trillion of the economy that's shut off right now. Once that starts to get turned back on, small cap should benefit strongly.
Yeah, well, they have been. I mean, the Russell 2000, look at it, we're showing the chart right now, is not quite at its highs of a year, but I think it's up, don't quote me, 7 or 8% this month. The best performing index. Is this all, though, sort of a stimulus, domestic recovery type story?
Oh, big time. Yeah. I mean, this is the big driver right now, is regardless of what happens in the election, is it's all about stimulus. So the economy needs additional support. We've got $1 trillion of the economy that's shut down right now, which is that hospitality, airlines, travel, gaming, entertainment type of industry. And so once that gets can figure a way to turn that back on, and it supports all of the ancillary businesses like the restaurants and everything around it, we'll see more growth, more traction.
Do you think the big tech trade is kaput?
No, it's not kaput. The problem is that when you take the big tech out of the S&P 500, the dichotomy of the performance is significant. So the real challenge is, when do you start to look at REITs like Simon Property Malls? When do you start to look at retail? And we think the time is actually now.
Do you? It is now. So you think that because there's a lot of people talking about some worse outcomes for the REITs without naming names. I've heard some people, suggesting harder times, and that's all I'm going to say.
Well, 60% of all sales right now are still done through brick and mortar, so it's not going away. It looks like it's going away right now, but we think you look at high quality properties, they should pull through. They're strong. They're strongly capitalized, good sponsors. And the interesting thing about Simon is it's changing its business model, because look who just bought Brooks Brothers.
Shepard Smith here. Thanks for watching CNBC on YouTube.